Today we're going to talk about how to hold on to profits. Stay tuned, we'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Today we're going to be talking about how to hold on to profits. So we talk a lot about how to cut losses, why a lot of traders lose, why most traders are losing traders. Today we're actually going to talk about the other side of the coin, and that's how to hold on to profits. You can actually go broke from taking small profits and large losses, but one of the most important rules in trading is to run your profits and cut your losses. And oftentimes, as we've talked about in other videos, most of the research and broker statements show that most traders will carry large losses and take small profits. So today we're going to talk about how we can potentially hold on to profits and improve our results as retail traders. So one of the most common things is that traders will often, or novice and amateur traders will often get into a trade and they don't have a clear target. So they might have a focus on how to get into a trade, but once they're into that trade, they may not have any expectation or level or any idea of where to take a profit. They just want to hold on to it and hope that it keeps going and going and they can make a whole bunch of money from it. Now we know that, especially in Forex, most markets will just tend to continuously move up and down even if they're trending. So oftentimes, even you could be in a trade where you're up 100, 200, maybe 300 pips. And if you don't take any of that off the table, you could end up getting stopped out at break even or even with a small loss or a large loss if you hold on to it. So it's really important to have a goal not only of when you're going to get into the trade, but also where you're going to get out. There's only two things you can control in trading, and that's how much you're going to make and how much you're going to lose. So regardless if that's a stop loss order or a take profit order, they're always just orders of how much money you can make and how much money you can lose. Number two, they have a low tolerance for risk and they take premature exits. So what that means is you get beat up, you've chopped up into the markets, you take a few losses, you get into a trade, it actually goes your way, you're up 20, 30, maybe 40 pips, so you get out of the trade. And you think, great, I made some money, my average loser is 80 pips, but I made 40 on this trade. Then you continue to watch that trade go on for the next 5, 6, 7 days and move 500 pips. So you miss out on the actual big run of the money. You've taken a small profit, but it's still less than what your average loser is. So really important to make sure you don't take premature exits. Again, coming back to number one, setting a goal. Now, depending on which time frame you're trading on, they're all the same. You want to be looking for an asymmetrical risk reward. So if you've got a risk of a certain amount of pips, you want to probably at least be going from a minimum of 2 times your risk. What that ensures is that you can be wrong up to 50% of the time roughly and still be close to being profitable. So it's important that you have a goal in place and that you be patient and let that trade hit your target, which leads us to number 3. Not being confident with your trade or your skills. Now a lot of this will come from your back testing, studying on live charts, making notes in your journal, and going and reviewing this. We talk about this in the 7-step daily routine for high performance traders. If you haven't done so, get that audio file from my homepage, download it, you can take it wherever you go, listen to it. Make your own high performance daily routine. One of the components in that is about accelerating your learning. So if you can go through, for me on my end of day model, I can go through 6, 7, 8 months really quickly, bar by bar. And if you can speed that up and get sample sizes of 10 trades at a time and making that mechanical and getting your results down and having your losses limited, when you get into live time and you're taking those trades, you've got the confidence not only to place the trade and accept the loss on that trade, but also if it moves in your direction, how to manage that trade, move your stop losses, but also have a target in place and be patient enough to let that trade come to fruition until it gets to the target or it gives you price action or time as a reason to exit that trade before it hits the target. So you need to have that patience and build the confidence in your trading skills through your testing and through studying on live market charts. So that leads us to the final component. You need to be able to trust yourself. Confidence and bulletproofing your mindset, number one. So we talk about this. I've said this over and over and over again. The bulk of my videos are always about bulletproofing your mindset. Every single day you need to be reading something, reviewing something, listening to something, watching something. Every little bit that you can put back into your head, especially as a retail trader. We are so subject to the emotional pitfalls that will ultimately destroy your trading account and take you off purpose and take you off of being on that path of constant progress. It's important that you build on that every single day and bulletproof yourself for success. And then the second part of that, small things done right, confidence through accomplishment. That's one of my favorite sayings. So, you know, in sport, I come from a sporting background, ice hockey, triathlon. We used to say in ice hockey, win the battles in the corners, win the one-on-ones. Win the one-on-ones, win your shift. If everybody goes out and wins their shift, we can win the period. If we win the period, we can win the game. So you need to build on little things done daily, done right. Small daily disciplines pay big dividends. And that's really critical, especially in trading. Like Jerry Parker from the Turtles said, do the right thing. Just keep doing the right thing. You're going to win some, you're going to lose some, but you're going to limit your losses. You need to learn to ride your winners. Take off as much off the table as you can with your winning trades. Lose as little as possible on your losing trades. Keep going forward. Keep getting better. Stay in the game. Don't blow your trading account up. Just keep growing it slowly, but eventually that trading account will grow to such a size that those small returns start to become a reasonable sum of money. Your trading account can continue to still grow, and you yourself as a trader will have evolved into the trader that you want to become. So hopefully you got some value out of today's video, traders. Hold on to your profits, cut your losses, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined and may the markets go with you.